Now, according to an analyst on Wall Street by the name of Jefferies, they say the Trump tariffs could reduce Apple's profits by 14%. Now, when I look at the charts, I don't really care because, as you can see, prices are now selling from the all-time highs are down nearly 28%. And if you look at the weekly chart, prices are now within this level on level weekly buy setup. Now, before we continue with the analysis, let's actually look into this article. It will be coming from investing.com. And so let's begin. So Jefferies analysts warned that proposed U.S. tariffs on Chinese exports could significantly impact Apple's profitability, estimating a potential 14% reduction in the company's net profit for fiscal 2025 if it's not granted an exemption. Now, Apple was exempted from tariffs during Donald Trump's first presidency, and Jefferies believes it could receive similar treatment this time. Why? Well, their base case remains that Apple will be exempt from China tariffs, the firm stated. However, if Apple is not exempt, the 37 million of iPhones made in China to be imported into the U.S. will be subject to 54% tariffs. Hold on to your old iPhone 13s because of this. The company could face a substantial financial hit. Apple recently announced plans to invest $500 billion in the U.S. over the next 4 years, including supporting Taiwan Semiconductor, the Amazon Arizona chip plant, and create 20,000 jobs. Jefferies believes this commitment could improve Apple's chances of securing another exemption. For a breakdown, 85% of iPhones are assembled in China, while 15% are made in India. So 100% of their iPhones are made overseas. The U.S. market accounts for roughly 1/3 of global iPhone sales. Tariffs, which include a 54% rate on Chinese import and 26% on Indian imports, have already triggered a sell-off in the Apple's supply chain stocks. All right, going back to the charts. Now, this is the monthly chart, and it's worth denoting we do have a monthly buy level at about $164. So that is roughly $28 from current price. But price has to deal with the buyers now currently at this weekly buy level at 188 and this weekly buy level at 182. Now, the analogy is a football analogy. Consider the 188 level your offensive line. Consider the 182 your quarterback. And so as the sellers duke it out with the buyers at this top level, so you have the defensive linemen battling out with the offensive linemen, meaning you have the buyers duking out with the sellers. If and when price declines to the quarterback level, well, there will be less defensive backs trying to get the quarterback because some of the defensive backs were taken out by the offensive line at 188. Now, if we zoom in just to show you how those levels were formed, we have this rally, we have a basing candle, rally out, two basing candles, and then the rally out, forming a level on top of a level. So what are the charts suggesting? When we have a level on level, I typically go for the lower level in this case. And what I would do, put my buy at this level here with a stop. Below the lower portion of the zone. So this is the trade setup that I'm looking for going through April into May. Now let's zoom down to the daily chart. Prices are now below the key 200-day moving average. Apple is in a correction or bear mode. Again, prices are more than 20% off the highs. Just showing you how that level on the daily looks like. Gap higher, so that's extended range green candle, basic candles, and then the leg out. Let me know what you think. Is Apple a buy, hold, or a sell?